on your earphone?
Yes.
Yes. May I request you to please switch to your handset because your voice is echoing.
Hello?
Yeah, go ahead.
Yeah. Sorry, I just wanted to ask on the leverage ratio in terms of the net debt to EBITDA being elevated at 3.3 times. So as our capacity utilization increases gradually, how do you see this settling?
I think the net debt by EBITDA is because of the lower EBITDA. I think as we indicated, for a full year basis, actually we will be definitely improving. As we indicated before, we are targeting to make it less than 2.5 by end of March 25.
Okay, that's helpful. And I wanted to ask the second question on the mix in terms of the ARV and non-ARV. So given that in Q4 and Q3 of last year we were around 50% and it's gradually come off a bit, how do you see this mix if you look at, say, from a 1 to 3 year basis going forward?
I think, as we mentioned in previous calls, the overall ARV franchisee will remain, give or take, 100 crores, around 2,400 crores, 2,500 crores. That's the range we expect, despite of how much effort we put. Because we don't want to invest more in ARVs, APIs, because most of the investment going in other areas. So, even in Q1, you might have seen our ARV contributed 550 crores out of 1,200 crores. So 650 crores came from other APIs, other businesses. So as we grow in other businesses, especially what we are saying, our animal health facility is going on stream, our crop science ingredients facility going on stream next year. Most of the clinical programs, late stage, we deliver second half of this year, and the commercials kick in next financial year. So gradually, we expect the revenue contribution coming from ARV, APIs and formulations. The quantum will remain same, but the percentage will significantly come down over a period of time. We don't want to comment the percentage, then you can gauge what is the top line. So we want to leave that space open. Yeah.
Okay, thank you so much.
Thank you, sir. The next question is from the line of Jeevan Patwa from Sahasrar Capital. Please go ahead, sir.
Yes, sir. So, first question is on the one of the slide where we mentioned that we have done some 2,600 crore capex. So, out of that 2,600 crore capex, how much is currently being utilized? How much is not being utilized?
Mr. Jeevan Patwa, what is happening in the current capacity utilization which we have built for CDMO projects?
Right.
We are not utilizing full capacity. Suppose we are doing 20 chemical steps in a project. We cannot do all 20 steps at a time because the project is not commercial. We do step 1, step 2, step 3, step 4. So the facility which we do this complex chemistry, maybe if you see the reactor operation, it could be between 10-20%, no more. But the facility looks like fully occupied, but the actual utilization will be very, very marginal. So, going back to the question, this 2,600 crores investment, about 3/4 of that is done for CDMO. Yeah.
Okay. Got it, sir. And second part is, so we are actually seeing last 2 years that FY25 is the year one should be watching out for. But the first quarter actually doesn't look like, the quarter. So even last quarter we said that all bad quarters are behind, right? But Q1 is, again, I don't think it's a good quarter again. So any color on this? Are we still think that FY25 will be the big year, or you think 26 will be the big year now?
Jeevanji, we said our H2 will be better. Actually, we have indicated H1 will not be that great, and H2 will be definitely better. That's what we indicated. And frankly speaking, this quarter one is in line with our internal guidance. So we are in line with the thing, and FY25 definitely will be a good year. But we indicated FY26 will be the much better year because some of the assets which we invested, like animal health, etc., will started yielding results.
Sure, sir. And we have done a lot of work on the CDMO side. So we talked about a lot of processes that we have developed, biocatalysis, continuous flow chemistry, and all that. And we are talking to a lot of big clients since last few quarters. So anything any color on, any large contracts or anything which is under negotiation, in the last stages or final stages, do you see any? So how do you see that? So,
what we can say, we have utilized our biocatalysis expertise, and we are making enzymes and using in the late stage clinical programs. That's the one good thing. And second, when we are saying continuous flow chemistry, we have delivered registration batches for an API. I would say we have completed registration batches for an API. Deliveries will happen this quarter using continuous flow chemistry. So we are demonstrating our capabilities, which are going into the registration files of our partner products. Large-scale biocatalysis, large-scale continuous chromatography, large-scale continuous manufacturing. These are going into our partner products. And we are also adding continuous manufacturing in hydrogenation also. We are expanding our capabilities. These will go into the files once they get approval, and then the commercials will kick in. Yeah.
Great. That's it, sir. Thanks a lot.
Thank you.
Thank you. Before we take the next question, a reminder to all the participants. If you wish to ask a question, you may press star and 1 on your touchtone telephone. The next question is from the line of Bharat from Quest for Value. Please go ahead, sir.
Yeah, thanks for giving the opportunity. Sir, in annual report, I see that there are 17 Para 4 and 11 FTF opportunities. May I know when can we expect the revenue from these Para 4 and FTF?
It will come from FY20. The major will come in FY29, not before.
Okay, good. And this question is more on the macro level. I want to know your opinion on this Biosecure Act in US. Do you see supply chains shifting away from China for the innovator CDMO? And may know which country will benefit most from this shift? And do you see any supply chains shifting to India?
I think because of the Biosecure Act, people will diversify their supplier base, that's for sure. And India is likely to get benefited from this. And it is not going to be a knee-jerk reaction. Nobody is going to shift in 2 months. So they will take its own time. They visit, they audit, and they give a small project, and then increase the collaboration over a period of time. I think in the long run it will benefit. But in the short run, it is not going to happen in a quarter, in 2 quarters. It will take its own time. Yeah. But in the long run, it is a definite good step towards the CDMO opportunities for Indian companies.
Okay, thank you. And sir, you guided that the ARVs in total would be around 2,500 crores, and for FY25 also the guided margin was around 20% EBITDA. Are you still confident of achieving these 2 guidance, sir?
Yes. Yeah. Broadly, yes. Yeah.
Okay. And regarding the new capex in FDF that is funded by customer, I just want some clarity on this one. So, are you going to expand Unit 2 from 10 to 15 billion, or is it in Unit 2 10 billion itself? So, you are giving some allocation to this new customer.
We plan to expand. The current 10 billion is not enough for our products and the partner products. So partners need certain type of equipment, certain type of technologies. So we'll buying partner specific equipment and installing. That is in expansion. So in 18 months, our capacity at Unit 2 is going to be 13 billion tablets, not 10.
Okay. So 3 billion for this new customer and 3 billion for joint venture with Jakarta, and the rest would be used for ARVs and our general things, right? Okay. Okay then. Yeah. Thank you very much, sir. Thank you.
Thank you. We take the next question from the line of Rishabh Gang from Sacheti Family Office. Please go ahead.
Hello, sir. Am I audible?
Yes, sir.
It will be good if you can speak a little louder.
All right. So, I wanted to understand, in the annual report it mentions that there will be pricing headwinds in some parts of the API portfolio. So, need some light on the reasons for this and how long will this continue? Further, how much impact on margin this will cause?
Sorry, we are unable to hear clearly. Are you using a headset?
Yeah, I'm using my headset only. Am I audible now?
Sir, you'll have to switch to your handset, sir.
Yeah, headset only.
Not the headset, sir, your phone. Could you please take off your earphones and speak through your handset?
Yeah, sure. Am I audible now?
Yeah, better.
Yeah. So, my question is that in the annual report mentions that there will be pricing headwinds in some API portfolio. So, need some light on the reasons for this and how long will this continue? First question. Second, further, how much impact on margins this will cause and how much of this pricing impact company expects to be moderated by cost improvement measures and increase in CDMO and biotech business?
As you have seen, our quality of business is very good as we demonstrated gross margins around 50% consistently. Despite price of APIs going down, we were able to maintain the gross margin because if you look at our last few quarters, the growth in CDMO revenue is not big, but we were able to maintain the margins at healthy 50% or above. That was primarily because of our sourcing benefits coming from the softer RM prices and higher opportunities and higher process improvement benefits coming from our R&D efforts. These two are the main reasons we were able to offset the price headwinds in the APIs.
All right. Also, I understand, what are your any guidance this business in 4 to 5 years?
I'm sorry, we are not giving guidance, but we are saying, as you mentioned, we are confident that the performance will certainly improve from H2, and we are very confident on delivering some interesting and large CDMO opportunities.
All right. Any outlook on agro side?
Agro, no revenues will come this year, so the facility will be commissioned only by end of this financial year.
All right. All right. Thank you.
Thank you.
Thank you, sir. The next question is from the line of Mr. Smith from RDA. Please go ahead.
Yeah. Thank you for the opportunity. As I can see, we received patent for Iva Castor. I mean, are we pursuing opportunity in API market or formulation market?
We have several patents, but that doesn't mean all patents will pursue for commercial opportunity. Yeah.
Okay, but anything, I mean, what is the market, I mean, addressable market and something like it?
No, we cannot give product specific guidances.
Okay.
Thank you, sir. We take the next question from the line of Madhav from Fidelity. Please go ahead.
Hi, good evening. Thank you so much for your time. When you speak about the CDMO or the NCE commercial CDMO launches in quarter 4 or second half of this year, does that mean that the product sort of moves through the R&D pipeline for the customer via Laurus, and now it's kind of commercializing for the customer with a new launch. Is that how we should look at that opportunity?
No, we are not delivering commercial quantities. We are delivering projects for their registration purposes. Okay. Yeah.
So this is basically after phase 3, but before actual launch.
After phase 3. After phase 3. Yeah.
Okay. So if this basically the registration batch succeeds, then FY26 we see commercial volumes coming in for that particular product. Is that how we should look at it?
Hopefully, we also expect the same. So the chances of success of these programs generally very high because these are in the registration pages. So we expect for complex molecules, their supply chain also needs lot of longer lead times. So hopefully, once we deliver these registration batches, we expect some commercial quantities in next financial year.
And currently, I think, if I understood right from the presentation, we are supplying volumes for...
No, we lost you.
Sir, the line for Mr. Madhav has got disconnected. We'll
Please,
take the next question from the line of Harshal Patil from Mirae Asset Capital Markets. Please go ahead, sir.
Yeah. Good evening, sir. Thank you for the opportunity. So just had one clarification. For the PPTs, if I have to refer to the API PPT slide, there's a comment which says that overall sequential decline due to timing of shipments particularly. So is there any problem that we faced, any logistical issue that we faced, and do you see this more as a transient thing or what?
No, that's not very... we can't give you a specific reason for that. Yeah.
Okay. But is it at least transient in nature?
Yes.
So we can expect the normalcy to be retained?
Yeah.
Okay. That was there, sir. And secondly, with respect to the CDMO thing, definitely you clarified on the NCE scheduled deliveries. But with respect to the existing supplies, sir, if you could just talk a bit about the traction and what kind of improvement we could expect for FY25.
I think our base of commercial deliveries is give or take 200 crores per quarter. That doesn't include any additional opportunities what we are delivering or what we are committed to deliver and where we have orders on hand. So once we deliver new opportunities, the value will go up beyond our regular supplies.
Okay, got that, sir. Got that. And lastly, if I can just squeeze one, probably on the margins where we're seeing that the API prices are getting a bit more softer. So believe that our margin trajectory, as you've guided, would be maintained despite of that?
I think at least gross margin front, all of you might have noticed, last several quarters we were able to maintain around 50% gross margin. So I think that we are very confident to maintain at that level. Yeah. So if you look at from in the presentation second quarter FY23 to first quarter FY25, that means almost 8 quarters. 8 quarters we were able to maintain around 50% gross margin. Yeah.
Great. Thank you, sir. That was it from my side. All the best.
Yeah.
Thank you. We take the next question from the line of Nitin Agarwal from DAM Capital. Please go ahead.
Sir, thanks for taking my question. So on your capex plans, given where your various expansion plans are, what kind of capex do you envisage for the next 2 years?
Ravi, would you like to answer capex for this year and next year?
This year and next year, probably anywhere between 1,800 to 2,000 crores, maybe
around that. Yeah.
Years together. Yeah.
And Ravi, how would you break that up into broad segments if you can?
Gross net as I indicate, sorry? Segment, the addition out of this, I think majority goes to the CDMO and some part goes to the FDF because of this specific requirement from the one of the customer.
Sir, on this customer specific requirement where you mentioned presentation, you mentioned that CMO contract should start on F27. How should we think about the potential, size or scale of this business?
I think these are, we know the volumes, we know the products, we know the price. So there are no surprises on either side. So we are putting that capacity because we know how much we are going to make on that. So, it is a very stable business. We are building that to a generic customer. We know the markets. We know what percentage of market share he is enjoying. So I think that is going to be a very stable business for us.
And just on this account, now since you're putting up additional capacity and formulations, this quarter, for example, over the last few quarters, we've had extreme volatility in our ARV supplies to LMIC markets. So the capacities that we have for finished formulations, are they fungible across ARVs and non-ARVs? Or we have to use a certain amount of capacity only for ARVs only?
Oh, no. Formulation capacity is very fungible. So we can use it for ARV, non-ARV, diabetes, cardiovascular. There are no challenges. Only the size of the batch determines which line we use.
But is there any reason why? So what proportion of the capacity currently is utilized for ARVs or the formulation side?
ARV, we are making about $100 million sales on average. So why we will allocate capacity of ARV to something else?
Sorry, sir?
He is asking how much percentage.
So how much percentage of capacity we are using for ARV? Maybe
60-70%.
25, formulation wise, maybe 25% capacity is used for ARVs.
25% of that.
Yeah.
Okay. And then lastly, on the CDMO business, you obviously are into multiple negotiations. So what will be the nature of most of the business that comes in? It will be for early stage projects, or do you have also opportunity for certain large supplies starting because you're probably taking on some of the more commercialized products. So what do we have like the commercial supplies coming through immediately, or you have contracts where you build up the relationship and then supplies happen over a period of time?
The most of the supplies what we mentioned will happen in H2 of this financial year are for registration or phase 3 projects. So the certainty of those moving into the commercial is very high, and we expect some commercial orders will come next financial year.
Okay. Thanks.
Thank you.
Thank you. We take the next question from the line of Madhav from Fidelity. Please go ahead, sir.
Sorry, my line had dropped. I was just asking that the one molecule which you spoke about when we're supplying the registration batch. So if I understood right from the presentation, currently we are supplying 10 commercialized products in the CDMO division. So this one, if it succeeds, it will be the 11th product for us, which is commercialized. Is that how we should understand the business currently?
No. When we said 10 products commercial, those are already in our base sales. And what we mentioned, the new projects, those are over and above what we are supplying commercially. Yeah.
So basically commercial doesn't mean that it's a commercialized molecule for the customer, basically. That's not what you're indicating.
No. 10 products, what we said commercial, those are products commercialized at our customer side also. That's what it is.
Exactly, that's what. Okay. And just the other question was, in the CDMO business, currently, how many of the supplies that we are expected to do in FY25 are for like these registrations, which is, very close to commercialization? Then like 2, 3, if you could give some sense there, and how many are in, late stages basically? Yeah.
Typically, when people file NDA, they expect to launch in 12 months. If there are no red flags raised by the FDA or the agencies, they will launch in 12 months.
Got it. And for the particular project, is Laurus the sole supplier, or it's going to be like...
We are not talking of one project, we are talking multiple projects. And nowadays, with the global supply chain challenges, nobody is going to use only one supplier for any project. I want to be very clear there. Yeah.
Okay. Yeah. Thank you.
Thank you.
Thank you. Ladies and gentlemen, we take that as the last question for the day. I would now like to hand the conference over to the management for closing comments.
Thank you for joining our conference call for Q1 FY25 and also asking very pertinent and interesting questions. Thank you. Thank you.
Thank you. On behalf of Antique Stock Broking, that concludes this conference. Thank you for joining us, and you may now disconnect your lines.
Thank you.